The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648. One last reminder that if you're a subscriber to the newsletter that I do for TFNN, I'm doing a webinar tonight for the students and the subscribers to the newsletter. That will be at 6:30 Eastern Time. I'll be on for about an hour, and I have a little presentation prepared. Plus, I think I have time for questions and answers and stuff. So we'll see, how that works out. Tomorrow we have the commodity show, which is we're really having some interesting things in commodities as we are in the stock market. But I thought I would start today. First of all, I really enjoyed Basil's show. I try to listen to him every day. Sometimes I don't get to listen to the whole show, but today I listened to him and watched his charting and stuff, and he does a fantastic job. And he talked about the Dow Jones, that if the Dow Jones got to the 151.75 level, that he would be a little bit of danger. Well, for someone who's an expert technician like Basil is, for him to give that warning, given the fact that the market is straight up, means that he's seeing something that is maybe not nearly as clear as it might be. The first chart that I posted into Tiger TV today is the chart of the VIX index on the left, and on the right is the Nikkei Dow. The Nikkei Dow has a 95% correlation to the Japanese yen. In other words, when the Japanese yen rises to the dollar, the Japanese stock market will rise. So that's what's happened, and we've had this tremendous move in the Japanese yen. What's important about this chart is if you look at the Nikkei Dow chart on the right, you'll see the 135 markings that I have there. The 135 designates higher bottoms. In other words, the bottom one is the first bottom, then you have bottom 3 is the second bottom, and then you have bottom 5 is the third bottom. And that's exactly what we have going on in the VIX index now. Now, I watch the VIX all the time because it's one of the three things that Basil follows, and I've been following for years too. But he looks at the stocks and the bonds and the VIX index, and but that VIX index is not going down. It's making higher bottoms. I don't understand how that could be. I know that there's not much fear in the market, but somebody's doing some type of a hedge there, I think, because the market is, making higher bottoms, which is, really amazing. Now, this might change and the VIX index might collapse, which is certainly possible, but we have reached, that profit objective that I've been looking at in the Dow Jones at 15,250. That's the 1.27 on the long-term monthly chart. That completes the 5-wave reversal pattern. I said in the newsletter that I prefer, to sell on weakness, and I would have, if the cash S&P goes below the 158 level, then I would say that would be the signal that you would want to be ready to, go to the short side. So that's what I'm looking at, is to see. It's the first time you get a move down of more than 200 points in the Dow, you are certainly, that will certainly be the trigger that if this cycle that we have looking at us right now is going to occur, then this is when I would say that would be the time to. We have plenty. That would be the time to get out, but we have plenty of time. I mean, the whole world is bullish. Some of the smartest minds on Wall Street came on yesterday, and Laszlo Barini and Jim O'Neill from Goldman Sachs, and so many other guys that were on there. I think they had 5 of them on, very, very famous people, economists, and they were all extremely bullish. That doesn't bother me. They were extremely bearish when the market was down there at 6,400 in the Dow back in March of 2009. But this is a monster pattern that we're looking at here in the Dow Jones and the Nasdaq and the New York Stock Exchange Index. It might fail, but it has a better of 85% chance of making. The problem is it's a very long-term pattern going back months, so it might take, longer than I thought. I thought it was going to be on the 10th here we are on the 15th, and they still haven't heard my heedings of ill tidings coming. So it hasn't happened yet. So we'll wait and see, what occurs at that time. You remember it was about 9 months ago. There was a fellow in Clearwater, Florida, that has a radio station called TFNN. His name is Tom O'Brien. He had a 2-handle moniker, and it was King Dollar, and that's exactly what's happened. The dollar has exploded out here, especially against the Japanese yen, down around 75. Nobody wanted it when it was making 3 higher bottoms, and now the whole world is wanting to buy the yen when it's trading at the 102, 103 level. So, the big part of that move has happened. I think it's got a lot more to go. Whether we have a correction or not from this level, we'll have to wait and see. But, the thing is that, you have to be able to, look at these patterns and disassociate yourself from the news, which when you're looking like I am with so many various patterns, and I'm just talking everything. I mean, it's across the globe. I'm seeing the same patterns across the globe. I went back and I looked, and I called some of my friends who have been technicians for as long as I have. They have never seen this either, where everything is coming together, all at the same time. It portends something really serious, something probably, a little bit scary. Maybe it's the demise of Larry Pesavento as an analyst. I don't know. That could be it. That won't be it because I think I'm going to stand in front of it. I tried it at 16.22, and I stood aside there after a 5-point loss. That was the last time I nibbled at it. So the main thing here is that we're at something really big, and I've seen this before. We've seen these parabolic moves before, folks. We've seen them in silver, gold, sugar, copper, Google, Apple, any of them. It doesn't make any difference. They all look pretty much the same. Now, I wanted to switch over here and talk about Apple for just a second because we were watching this stock for a long time now, and this stock has been much weaker than the market all along. And on this last move, we were looking at the bottom to come in around the $394 per share level. It did. It rallied up to the 786. It took about 14 days to get there. That was up around the 465 level. I think the high was 467, something like that. And now we're coming down, and we're getting ready to test the 61% retracement, which will be down around the 415 level. We're only $15 away, so it's not very far away. When we come to the break part of the first short break, I want to cover the opening price just a little bit to show you how it can be very helpful, when trading some of these stocks. It works in foreign currencies, and it also works in commodities. But when we first did this work, 40 years ago, John Hill and I, we didn't have electronic trading. We didn't have 24-hour trading. We had set hours, usually about 5 hours a day, and so it was easy to pick the opening price. Now it's a little more difficult, but it still has applicability, and I will try to explain that, when we get into the break part of it. But the price level that you want to be watching if you want to buy Apple would be right about the 61% retracement. I believe that'll come in around 420 to 415, and then you'll be able to see it real easy. Well, actually, you went up $80, pretty much from 85 to 65. That's $80. Well, 61% of $80 will be $52. So you subtract $52 from the 463, and that will take you to 413. So that's where you want to be looking at the price of Apple to reach. It could make the 786, which will be a little bit lower than that, but that's what we'll be watching. One of the most amazing statistics that I have seen recently, and I see a lot of them, of course, but one of the most amazing ones that I've seen was something that someone sent me yesterday, and that was here it is right here, excuse me. It was something that's happened in the stock market. It has been 177 days in the stock market since we've had a 5% correction. That's 18 straight days in a row that the market has been up on Tuesdays. 18 straight. That's never happened. And, the streak of this many days in a row of 177 days without a correction. The only other time this has happened was 1968. That didn't even happen during the 20s. And so, this is really, we got a lot of bullishness going on. The thing that's happening is, if this is really this bullish, there should be zero fear. The VIX should be trading at 6, not 12. Something's wrong. Somebody's putting a massive hedge on, or the market's trying to give us a message here. Until that thing breaks, then you've got to be, extremely careful. It's amazing. We finished our 18th straight day on Tuesdays to be up in the Dow on yesterday. When I saw those statistics, I really I couldn't believe it when I did it. When I was at Drexel, I had I didn't do hardly. I did maybe 0.1% stock business. I did all commodities, but I always used to watch the stock market. We didn't have stock indices then. There was no Dow Jones to trade, but I did basically bonds and notes and a lot of currencies and a great deal of gold and silver, soybeans, corn, and all that other stuff. But with all the things that are tradable now, you've got to be able to be a master of a lot of these things. And my hat's off to Basil, because he covers so much and so thoroughly that it is really amazing. He's a real pro. I think Steve Rhodes is going to be at his level one of these days after he gets more experience. But frankly, I don't have enough time left to get to be at Basil's level. But he really has a great deal of information. And it's good information, too. It's basically technical, and that's what, keeps him in the game. He's not interested in the earnings and stuff, so he has a technical picture of what's going on, and that's what we're looking at. We've talked about the VIX that he talks about all the time. We're also going to cover the bonds a little bit later, because we had a big break in bonds. We went down and tested some key support today down at that 143.17 level, and if we go much below 143, we could be in a free-for-all in bonds. And then we're going to have a really spike in interest rates. You're going to see a spike in credit card interest rate. You're going to see a spike in your mortgage rates. Mortgage rates are already at a one-month high. They've already, gone up a little bit. Still not much, but a little bit. We got a call from John in Philadelphia, but I think we're coming into break. John, are you there?
Larry, I am here. I'd like to talk to you about silver and some other things, and I can hold through the break.
Yeah, I think, we can chat right now until I see the break of the music come on, and then we can go on. But we will take a look at silver, and what else would you like to look at?
Might as well look at gold, and maybe throw copper into the mix as well.
Okay, John, let me ask you, what is your feeling on silver here, approaching the $22 an ounce level again?
It's funny you should ask that, Larry. I am not buying silver right here. This pattern over the past 3 weeks of lower highs, lower lows tells me not to, but I've got something real interesting I want to share with you.
Okay. Well, we got to take a break. After the break, we'll share this, okay?
Thank you.
Okay, stay with us, John.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, and we're with our friend John from Philadelphia. John, are you still there?
I am, Larry.
Okay, you were telling us about the silver, and you and I have discussed this privately many times. Why don't you tell the listeners, what we're seeing here?
Sure will, Larry. Before I do, you were, I'm sure, short selling silver overnight.
I don't trade silver hardly at all anymore, John, because the fills are so bad. The liquidity in gold is 6 times as much. But I was up quite a bit last night, selling gold because I really think we're heading towards that 1385 level, which is the 61% level. But yeah, it was a pretty active night. Not as active as it was 2 weeks ago coming into April 15th, but it was still it was pretty easy money because it just kept dropping, and you don't see that very often. So
no, I see. Right, exactly. A feature I can share with you I just found fascinating. I posted in the Tiger's Den for your listeners if they care, was the silver monthly chart. I constructed that using the log chart so that equal spaces on the vertical axis were equal percentage price changes as compared to equal dollar moves. And what is just fascinating is that a support mark comes into precisely in April and May at $22, which just so happens to be the low in April. And further interesting to me is that the swing high of 2008 was $21.40. So I am not buying silver here, but if we can form a low above that $21.40 mark, then rally up and give us some indication of a short-term low, we may have something very powerful on the long side. And the caveat I'd tell you is get below 21, and it just totally disrupts any bullish scenario that I can see. So I'm going to let the market give me some more info, but I wanted to share those parameters.
That's good information, John, and the fact that the warning that you're giving folks about waiting until that bottom is in, there's no reason to try to catch a falling knife or to catch a falling safe. Wait for the safe to crack on the ground and the money falls out and then go over and pick it up. So wait for the bottom to come in, and believe me, the people are so, the bears are, such control that the bulls are scared to death. So the first time, that you have a rally and it backs off just a tiny little bit, you're going to, you're going to get a sell-off. That's exactly what's happened in Apple. Apple had that $80 rally, and yet the stock market has continued. So Apple would be at $512 a share if it were doing what the stock market was doing, but that it doesn't, because the overall bearishness of the market, keeps it down, and that's what's happening with silver.
Indeed. In fact, I'll just elaborate. I received a call from a fellow trader this morning, and I shared that idea just shared with you, and was asked the question, well, gosh, shouldn't we buy silver here at $22.50, risking just under 21, because it's low risk? The idea, it is low risk, but we don't have any proof that I'd like to see of the bull case starting to form, and I'm prepared myself to wait for that.
John, someday when I come to Philadelphia, you've got to introduce me to this dude, because if he thinks $22.50 to $2,100 per ounce in silver is very small amount, he has really cojones. I'd like to meet someone that has a really view of what is risk and what is not. I mean, $7,500 at risk in silver, to me, I wouldn't be able to sleep for months. Well, I don't sleep for months anyway, but that would keep me up for years.
Right.
That's an amazing stop if he's going to use something like that.
Say, might I change subjects and ask about copper? Larry, I posted in the Tiger's Den as well a daily chart showing how I believe the 340 level is significant. Namely, that was the November-December low. We broke through that, and we bounced right up to that and failed. I'm kind of suspecting that copper goes down to retest 305, maybe break it, unless 340 can be exceeded. Wondered what you saw.
Absolutely, John. We had this little bounce where it went, roughly a 10% move in copper, when the market exploded up, and then, of course, the copper's down again with the market going up. So it's still the correlation between stocks and copper has just dissipated. It used to be better than 90%, and that goes back for years. And, since last January, copper has been in a massive downtrend from well over $4 a pound, straight down. So it certainly doesn't look good. I mean, and people ask the question, well, this is giving everybody a chance to buy copper cheap. If it is, where are they? Where are they buying? Okay, show me that they're buying it. Sure, we had a 10% rally here, basically a short covering rally, but stocks have been up, 20%. And
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I'm going to switch gears here a little bit because I think there are some interesting things that I don't talk about very often in the TFNN. Mostly I try to focus on the market and some commodities, but I want to talk a little bit about the opening price. Years ago, when my mentor, John Hill from Futures Truth, was teaching me some of this stuff. He lived in Hendersonville, North Carolina, and I would go there to visit him, and this was long before we had computers. But in 1981, when I was on the Florida Exchange, we had some, I was getting ready to move to the Exchange. I was back in November of 81, and I started in January of 82, and the thing that we were doing is we were watching the opening price, and we found that, in stocks and commodities, that the opening price will be near the high or the low of the day about 80% of the time. It was about 75% of the time at that time. Now it's running at about 60%. I posted a chart of Apple going back the last 5 months, and it shows the last 77 trading days, and you'll see that of those 77 trading days, 50 of those were right near the high or the low of the day. And I defined the high or low of the day by the top 20% or the bottom 20% of the range. The reason for that is the opening range that stocks have, because of the opening influx of orders, can be, pretty dramatic, especially not so much with Apple. Well, Apple's a $400 stock, so it can be pretty dramatic, but the range could be, that much. You need to wait about 20 minutes to get the actual high or low, during that time. So it's just a just another way of looking that. I unfortunately the chart that I posted into Tiger TV is not the best quality because of the format that I use. I have 42-inch monitors, and it's a real pain to try to get them down to size that will go into the Tiger TV, and so I usually post them directly from there. So this is a problem with posting them, but the only way you can really understand the opening price is to look at it every day and start to prove to yourself that prices near the high or low of the day are really amazing. Yesterday in Apple, it opened higher and it broke and then rallied back to a 61% retracement and then dropped 5%. That was with the stock market going up 150 Dow points. And so it goes to show you that it's a market for stocks, not just a stock market. So you have to be able to, understand that this is, a process of learning, to do some of these things that I think that are relatively important. I would like to spend a second now to go over the gold chart because we looked at silver and gold on the 60-minute basis, but we really need to take a look at the gold market on a longer-term basis because we came within $4 of the exact 61% retracement that we've been waiting to see for a long time here. We're just within about, we missed it by about $6 so far, but I still think we're going to get to that level, and that will be the spot where I'm looking to be a buyer of gold. I will take a nibble at it at that point because that is the pullback that I've been waiting for, and it is coming at the time where I think it should be a good buy. Now, gold has stopped. The first time it stopped at the 38% level. Then it came down and stopped at the 50% level, and now it's approaching the 61% level. We were within about $4 of that exact low today, and gold is so perfect. Well, not perfect, but it's so harmonic and it has such symmetry to it that I have to stick with that 1385 level. The low has been 1387.5, I believe, and so another few dollars lower in gold, maybe tomorrow or even today. Then I will take a look at the gold at that point. And what I'm looking at here is that we made our low on the 15th of April. That was the big ABCD on the long-term weekly chart. Just like we had the long-term weekly chart on Apple down at 394, the same thing with gold. It came in at 1360, and of course it went on a fast move down to 1322. We rallied $160 an ounce, and now we are pulling down about $100 an ounce to come to the level that we're looking at here if we get to this 1385 level. So we'll be watching that one very closely tomorrow, during the commodity hour. Now, we had a question from Scott about the astrology and how I use astrology, with the foreign exchange markets. I don't use any astrology with the foreign exchange markets as of yet. I'm writing a new book right now with one of my colleagues, Shane Smolny, and we will be doing that sometime in 2014. We're about halfway through the book right now, but we will have some things, on foreign currency. But frankly, folks, if you just look at the foreign currency patterns, you really don't need a whole lot more than that because that gives you such an incredible edge that it follows these patterns just absolutely unbelievable. It hits the ABCD patterns, the Gartleys, the butterflies, all of them. We got a call from Bob in New Jersey. Bob, are you there?
Yes, Larry. Good afternoon. How are you?
I am good, sir. How are you today?
I'm good. I had a question about the Bradley model.
Sure.
I have it up on a screen in front of me using Ensign. I don't know if it's I don't know if the way I designed it, using the different parameters is correct, and I wanted your opinion. But it looks like the market has been following it, and it shows a top coming in the first week of June, and I wanted to know if you could pull it up. And
I have it right here, and I will put it in. As a matter of fact, Bob, I tell you what, I haven't looked at it very much because I've been watching the price action, at 1622 and 1632. I really thought the market was, in the S&P, I thought was getting ready to turn. And I know that Bradley, has got some really good things with it, but, we've certainly been, very, very strong. One of the reasons why we were bullish, Christmas Eve, because we had made that 61% retracement during the November holiday Thanksgiving, and then, we had the next run up. And the Bradley model is stopping sometime between now and you've got to give it a whole month because, it's just got a wide band to it. But that's I posted it into the room, and I'm pretty sure that's the one that you're looking at also.
Okay. I can't see it in the title.
Okay, but you're basically, I'm looking for a top in late May or early June is what what mine looks like.
Okay, good. Mine is showing this same pattern then. All right, thanks for your time.
Now, Bob, just hold on with me a second. I wanted to explain to you about this Bradley model because when Donald Bradley wrote this book in 1946, he published it in 47. He only ran 1 year, 1946. He didn't give any other examples. Jim Twentyman and I, we started looking at it, and we went back to 1876. We didn't have a Dow then, but we had a stock market that we could look at, and that gave us the statistics that we have. The people at Ensign Software, Howard and John Arrington, the people that run that company, were interested in it, and so they programmed it and, allow people to take a look at it. Now, some people adjust the parameters. In other words, they'll give a greater weighting for Venus, a greater weighting for Mercury, a greater weighting for Mars. We've never done any of that. We've never tried to optimize it, but some people have done that, and, whether it's better or not, I'm not sure. Theoretically, I think it would be because I think the inner planets, Mercury, Mars, and Venus would be much stronger because their cycles are closer to the Earth. But that I don't know.
But when you look at it, in other words, where it shows like a peak or a trough, it's within a 30-day period, not to the exact date.
Yes.
Okay.
That's what I'm trying to do.
It's pretty much on target.
Well, it's been that way, and I see that, and that's for a month there, I just let it ride. I mean, I just watched it go up. I bought it a couple times on on corrections, but basically it's been a straight move up. My big moves recently have been in the currencies, the euro and the pound. And the yen, I luckily caught a big part of that yen move, and then the gold. Gold has been, oh wow! I wish I had gold every year like this, but we don't get swings like we have in gold right now. It's just fantastic.
This Bradley model, is showing almost a straight dive down in the Dow, going to the first week of November.
And then you get a little bit of a bounce, and then another 6 months down. So if it starts to do that, we'll have several trading opportunities. But my trigger is we need to get the Dow down about 250 points, which is a little lower than what Basil is looking at. He's looking at 150, 175. You could use that one also, but I think at 150, 75, 15,000. 100 would be the 15,075. In other words, 200 points from where it is right now. That's what I'd be looking at. My original target for this expanding triangle came in at 15,250, and we're 25 points above that right now, I believe. And we can certainly go a lot higher. We're looking at a flagpole. Just looking at $49 silver. I mean, we know how these are going to end. It's just a question of when. Bob, it might be different this time. This might be one of those times that Rogoff and Riker talk about, that it's different this time. It might be different this time. It never has been, but we'll see.
We know it won't be, except the element of time where we can't pinpoint.
Well, Isaac Newton's law, his second law, what goes up must come down, will eventually prevail, but you have to say how far is up. Anyway, we'll see what happens. But you're right about the Bradley. It's getting ready to signal something for sure.
I really enjoy your program, Larry. Thanks.
Well, thank you for listening in. I certainly appreciate it. It's one of these days I'm going to catch this stock market on the right side, and we'll make a lot of money in stocks. But fortunately, we had currencies and some of the other things that have worked pretty good. And, we got some commodities coming up, too, that are going to be really interesting also. But thanks for calling in, Bob. I really appreciate it.
Thank you. Bye-bye.
Okay. All right, that was talking about the Bradley model, which is a astrological model looking at the timing aspects of the stock market. Has a very good track record, but unfortunately, like everything else, it is not foolproof by any stretch of the imagination. I'll take a second here. Tomorrow I've got to do a commodity show. We've got a lot of interesting things coming up in commodities. We've got corn, wheat, and beans are acting very similar to what they were doing last May, and we want to be ready to look to be a buyer of these very, very shortly in the next few weeks. We have to be ready to take a look at those, from the long side. Someone asked the question about who were the people that I heard about that were so bullish. The ones that made that I knew offhand, they were all famous names, but the two that I remember was Laszlo Barini. He was very, very bullish, and also Jim O'Neill from Goldman Sachs was also very bullish. They were giving the scenario that it's a risk-off scenario, that there's really no risk in buying stocks at this level because of the price of bonds, and there was no other place to put money. All of those things. But folks, the stock market is a very, very small part of the economy. It's very, very small. The Forex market is thousands of times bigger, the movement of cash, and the bond market is 5 or 6 times, what the stock market is. And we've had a, tremendous, the bonds have broken down. We tried to get short at the 150 level. They got to 149.24. The notes have broken badly. The bonds have broken badly. And if we get below 143 in the bonds, it's going to start to accelerate. And that's going to be a real negative sign. And this would be a case where stocks go up even in the face of rising interest rates, and that has happened before too. Doesn't happen for very long, but it can happen. It's just really amazing. But there's quite a few people that are famous, that have a lot of bullishness here. I don't know anything about the fundamentals. I'm just looking at the big long-term patterns that I'm looking at, and that's primarily what I'm basing my assumption on here, and the fact that we're over this big astrological aspect that we're watching at this particular time that could have good ramifications. I want to put the bond chart here for just a second, because this is such a long-term chart that I want to just put the weekly up here to give you an idea of where we've already completed that head and shoulders pattern that we had talked about. We wanted to get short at 150, and of course we missed that. It was the large ABCD, but folks, this is one ominous-looking chart, the T-bond chart on the weekly basis. All we need to do is to get actually about 143, 142. If we get below that, we're going to start to accelerate, and then we're going to take out the lows of 2012 down around the 135 level. And then I want to see what happens with the Federal Reserve, what they're going to do to try to keep interest rates at zero. Because if they start to do that, they're basically going to be giving the banks the biggest Christmas present the banks possibly can, because they can borrow at the window at 0.025 and turn around and lend it to people at a higher rate because the Fed's giving them free money. Okay, we got to take a little break here. 877-927-6648.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So we're winding up the show here. I hope you get to join tonight at the webinar we're going to give at 6:30 tonight. And I wanted to end the show by showing the long-term chart in the Dow Jones going back the last 15 years, showing these big highs that are coming in. And the symmetrical triangle that is there. So we'll watch that as it occurs. Now, also, I mentioned in my newsletter this week, there was an article in Barron's this week, top of their newspaper, about Dow 15,000. And if you go back and look, you'll see Dow 12,000, they were bullish, and Dow at 14,000, they were bullish before the market dropped to Dow 6,400, which was the March the 9th. Of 2009, and that was the start of the big move. I remember saying that time, and I said this will be the biggest short covering rally that we will see in the stock market, is what I said. It will be the record breaking, and that's because the bearish was so great, just like the bullishness is so great now. But I never, ever, ever expected it to make new highs. I didn't expect that at all. That really surprised me. I get surprised a lot. But that's the one that really surprised me, more than anything else. But I think what we're looking at now has some serious, ramifications, and it's not going to happen overnight. We're not going to come in someday, at least I don't think so. We're not going to come in someday and see the stock market down 10%. That's not how crashes work. Crashes are already on their way down before they crash. They don't crash from the highs. They crash somewhere in the middle or near the end. That's it. Your gold was a perfect example. when we were talking about gold when it broke 1565, and then, it was on its way down. It dropped $200 an ounce from there. But we have so many things that are happening today. I know the cycle date that I was looking at was the 10th. Here we are, the 15th. But the lunar one's certainly not working. But these other ones have, these are long-term cycles that we're looking at, going back a great deal of time. So it's nothing for them to be off a few days. And with the market, going up like this, that doesn't surprise me either. That's why I suggested to be a seller if it starts to go down. That's really, what I look at. Someone asked me the question, would I be a buyer of gold at $13.85? And the answer is yes, I have to be a buyer of gold at $13.85 because that's a 61% retracement of the move from April to where we are now. That's exactly a month at 61% back. Now, silver is given all of it back, but the gold is holding up, and gold is a much easier thing to trade because it's 6 times the liquidity. I'd use about a $10 stop on the gold. You don't have to risk more than that, and that's $1,000 in a contract that's $138,000. So that's a very, very low risk compared to what we're looking at. So that's why I would be looking to buy the gold if we get to that point. And if it doesn't make it, maybe today's the low in gold. I don't know. But, we're at the euro. We just switched to the euro for just a second. The U.S. dollar, the euro is just sitting there at the 786 retracement, folks. So something big is going to happen soon. Live every day in an attitude of gratitude, and may God bless.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.